Hello and welcome to BYJU'S Exam Prep IAS. Welcome to another session on Indian Economy Essentials. And in today's session, let's try and understand what is this Security Transaction Tax which is there in the current affairs very recently. That is, I'm pretty sure all of you have read in the newspaper that the government of India got passed or basically ensured that the finance bill was passed from the Lok Sabha. Now, out of all the proposals that were there in the finance bill, there was a lot of discussion. But apart from that, there was one tax that was there in the discussion. That is basically the Securities Transaction Tax. That is, in short, I will start referring to this as STT. Now, let's understand certain basics before looking at what is the Security Transaction Tax. All of you know there is a term called as security. And some of you will say that, sir, I know there is a term called as security. But what do you mean by security? I've never understood the term security to begin with. Security is nothing but instrument. Done? Security is nothing but instrument. Now you'll ask me, great. Until now I did not understood or I have never understood security. Now I don't even understand what is instrument. Instrument is any tool that is used in the market for trading purposes. For example, you have heard of bonds? You have heard of bonds. For example, in the recent times, additional tier 1 bond, government bond. You have heard of the equity, that is shares. So bonds or shares are nothing but instruments. So whenever you trade instruments, trade in the sense you buy, you sell instrument, it is nothing but it is referred to as a security. Now, Government of India earlier imposed a tax by the name of capital gains tax. Again, understand this. Many of you will simply say, sir, why did you use the term earlier? Even today we have capital gains tax, by the way. Let me tell you the context here. Before 2004, on the trade of securities, there was a concept called as a capital gains tax. Now, what is this capital gains tax? Imagine you purchase an asset and you sell the asset. You buy and you sell the asset. I'll just take simple example here. You purchase the asset at, let's say, 1 crore rupees and you sell the asset, let's say, at 1.2 crore rupees. So government would simply call this as a capital gains of 0.2 crore. For you, for me, for a layman, common man, will simply use the term profit, but government will use the term capital gains. And on the capital gains, government will impose a tax which is called as a capital gains tax, CGT. Further, the capital gains tax is divided into short term and long term. And when this model of capital gains tax was introduced, if you purchase and sell before 3 years, that is, you hold on to this for 3 years, up to 3 years, on the capital gains, the government would impose a tax which is called as a short-term capital gains or short-term capital gains tax. You purchase, you hold for more than 3 years, then the government would impose a tax which is called as a long-term capital gains tax. Again, is it uniform 3 years for all the assets today? Today, absolutely no. But come to the point here, even when you talk about securities, right, the securities are covered as a part of assets here. Securities are part of assets only. And that is, assets are further divided into two types, movable and immovable. So one of these assets are securities. So government, in order to ensure that they will be able to tax these capital gains, introduced a capital gains tax even on securities. But later government found that many of these people, or let's say taxpayers, are making capital gains but are evading taxes. Right? Somehow they are not paying taxes, misusing various provisions. That is the precise reason in the year 2004, budget of 2004, government introduced concept of Security Transaction Tax, STT, Security Transaction Tax. And this idea was implemented, or this Security Transaction Tax was enforced from the month of October 2004. Now many of you will ask me, great, What do you mean by security transaction then? Now let me show you a picture here. Please look at the picture. Do not by heart anything. This is much simpler picture here. If you look at the actual division that is provided by income tax authorities, it is much more complicated. Focus on the important points here. Whenever you trade securities, that is you buy and sell securities, now Government of India would impose a tax on these securities. Simple. Whenever you buy and sell these securities, government would simply impose a tax on the value of the securities and collect that tax from you. And why it was introduced? Some of you will simply say, sir, long-term capital gains tax was already there. Why did we introduce it? Government said people are evading taxes. I want to impose and collect taxes. So what I will do is, I will simply impose these taxes and collect it. Right? That's the reason when this STT was introduced, LTCG, long-term capital gains tax on securities, was withdrawn, later reintroduced. But along with that, now even today, there is a concept of security transaction tax. Sir, on whom the tax is imposed? These are the kind of transactions, and this is where the taxes are imposed. For example, have a look at this. Equity shares, right? Who pays the STT? Buyer. Right? Equity shares. Who will pay the STT? Seller. So argument is simple here. There are multiple types of securities which are covered under this. In some of the cases, buyer will pay. In some of the cases, seller will pay. In some of the cases, both of them will pay. You do not worry about it. Do not worry about it. It's a very complicated structure. But the argument of the government was very simple. I will impose, I will collect the taxes, and this will be an important source of revenue for me. Now, next very important point. Many of you would have searched the idea for security transaction tax in the Google and would be confused. What is that? Some of the sources will tell you that security transaction tax is a direct tax. Some sources will say security transaction tax, STT, is a direct tax. And some sources will simply say security transaction tax is an indirect tax. Right? Now you will basically ask me, sir, what do you mean? Right? Both the right types of taxes are associated with the STT. Is it a direct or indirect? I will go with the government document. Back in 2011, Ministry of Statistics and Program Implementation published a yearly document. And under this Ministry of Statistics and Program Implementation, in that document, they classified the security transaction tax as an indirect tax. They simply classified the STT as an indirect tax. So again I am saying, as per the Government of India's publication itself, it is an indirect tax. And moreover, if you look at it, you will realize it now. Have a look at this. Whenever you talk about direct tax, you are imposing and collecting the tax from the same person. I hope you understand. You are imposing and collecting the taxes from the same person. For example, income taxes. If I am earning income, government will collect income taxes from me. But in case of indirect taxes, the first point of application of a tax is on one taxpayer, but the final resting place is on another taxpayer. I hope you understand. I'll give you an example also. The first point of application is on one taxpayer. The final burden, that is the final resting place, is on another taxpayer. For example, GST. I'm pretty sure all of you heard of GST, Goods and Services Tax. Goods and Services Tax is an indirect tax. How? Government will simply say, the manufacturer of this pen will have to pay a GST of 10 rupee. But do you think the manufacturer will pay that GST of 10 rupee from their pocket? No. They will collect it from the customer, give it to Government of India. So first point of application is on manufacturer. Final resting place is on the customer or the buyer. Now look at the security transaction tax. Although in the picture it says the buyer, seller, etc. will have to pay STT, the government imposes the STT on the registered stock markets, on the notified or registered stock exchanges or mutual fund units, etc., etc. Argument is simple here. Government of India has identified certain people, have told them, right, basically you will have to pay taxes, that is security transaction tax to me. But let's say in a stock market or a broker or a mutual fund unit, etc., when they will conduct or when they will facilitate these kind of transactions in the market, do you think a mutual fund manager will pay the money from their pocket? Or a stock market such as NSE and BSE will pay the money from their own pocket? Of course no. What they do is they will basically transfer the burden on the buyer, seller, wherever it is applicable. In whichever case it is applicable, if it is a buyer, they will transfer it to the buyer. If it is a seller, they will simply transfer it to the seller and collect it and give it to Government of India. Right? That's a precise reason why MOSPI website, or let's say the document, annual statistics document, will classify this tax as an indirect tax. Now, what has happened recently? What has happened recently? There is a market which is called as a derivative market. Slightly technical now. There is a market called as derivative market. Now, many of you will ask me, sir, what is this derivative? I've been reading about derivatives for many days now without understanding what is actually a derivative. Derivative simply means it's an instrument which will derive its value from one more instrument. I hope you understand. It is an instrument, but it doesn't have any independent value. It will derive its value from one more instrument. For example, right, imagine I have 30 shares of a company X. I will issue an instrument to you, but this instrument will carry value from underlying asset, that is these 30 shares. Can I call this instrument as a derivative here? That is, these shares, let's say 30 shares, is equal to this one derivative. If the market price of these shares goes up, derivative value automatically will go up. If the market price of these shares will go down, derivative value will automatically go down. So can I now say that the derivative doesn't have any independent value? It will derive its value from the underlying asset. Because it is deriving its value from an underlying asset, these are called as derivatives. These are referred to as derivatives. Best example for derivatives is F and O, that is futures and options. Futures and options. Now what has been done by the government? Recently, Government of India, that is the Finance Minister, announced that the Securities Transaction Tax that is applicable on futures as well as options will be increased. It will be increased, and that has taken the limelight, that has taken up a lot of discussion in last 1 or 2 days in the newspapers, specifically business related newspapers. Now what is the issue here? Why are these F and O's are worried about it? Why is the derivative market edgy over this announcement of the government? First and foremost, the Finance Minister has clarified, right? Initially the tax rate applicable was 0.05%, but in the paper that was given or the document that was given, a wrong number was given there, right? Finance Minister says it's a typographic error, do not worry about it, because there was certain confusion that was created in the market because of that. But if you go beyond that now, the impact of this higher security transaction tax, the impact of this higher security transaction tax will be felt in the derivative market. Why? If you apply these taxes now, on an average, the taxes have been increased by around 25%. Right? On an average, the taxes have been increased by 25%. I hope you understand the statement by 25%, because you would have read in the newspaper, the STT has been increased from 0.05 to 0.0625, or STT has been increased from 0.01 to 0.0125. In essence, on an average, the tax rate has been increased by 25%. Use the CSAT methodology, you will get what I am talking about. So on an average, the STT has been increased by 25%. This, they say, will have a huge impact on the revenues or the incomes that could be generated by the participants in the derivative market. Why? There are a lot of these transactions which are done by certain investors, or let's say certain intermediaries in the market, technically referred to as high frequency transactions, HFTs or scalpers, etc. And because on day-to-day basis they conduct a lot of these transactions, already they are supposed to pay a lot of charges. They are supposed to pay a lot of charges. In addition to these charges, now there is additional charge, that is a higher security transaction tax, which is expected to have an impact on these types of middlemen, or let's say these types of the investors or people who are participating in the market. So there is a concern regarding this higher security transaction tax on these investors in the market. Done. So these are the various important points I wanted to discuss regarding STT. Now based on this, a question here. Consider the following statements regarding STT. It is imposed only in case the seller makes a profit. Absolutely no. Please remember this. Whether you make a profit or a loss doesn't matter. Why? If you make a profit or a loss, it will come under the purview of capital gains tax. But here, absolutely no. Whether you make a loss or a gain, right? If it is applicable, you will have to pay it. It is uniformly applicable on all the securities. Again, no. It is not uniformly applicable on all securities. It is different from one security to another security itself. Just now I told you, in case of futures and options, it has been changed by this much percentage or these numbers as such. And both the statements are wrong. Right option for the question will be neither 1 nor 2. So this is a discussion regarding the recent announcement of the Government of India to change the security transaction tax and the history behind the security transaction tax. If you like these initiatives, please hit the like button. Provide your valuable comments in the section below. And if you are yet to subscribe to BYJU'S Exam Prep IAS, kindly do it now. Thank you. Have a great day.